All righty. Tad Stevens, CPEthink.com here. And this morning we have Jeff Bourgeois with us. Jeff, are you there?
I'm here.
All right, super. Just want to make sure that everyone can hear me. If you can hear me, if you would please, okay, there's a few people saying so. Okay, so you can hear me. Yes, there are slides available. Somebody asked that. This is Zoom. This is a new webinar tool I'm using this time, so I'm going to have to put a link in the chat. I will do that here shortly. But in the meantime, again, this is Tad Stevens, CPEthink.com. We are recording this, so you will get a replay. You will also have this available in your My Courses page. And we will send the link towards the end of the webinar so you can get your certificate of completion. Plus, we will also have that in an outgoing email. So, Jeff, I'm going to turn it over to you, and I'm going to go get the link for the slides and take it away.
Great. Thank you very much, Tad. Welcome to everyone. I'm going to make a couple of assumptions. Number one, the people on today's session are at least interested in offering cloud bookkeeping or bookkeeping, as it were. And the other is that you're interested in growing and you're looking to be more profitable. So those are my assumptions up front. And really what I've been and done is I've been studying accounting firms, and one of the big problems we're seeing and huge opportunities is accounting firms, for some reason, either we can't contemplate it, we don't have the capacity or the staff, we're ignoring bookkeeping. And the reality is bookkeeping is an amazing revenue stream. It's a good tool for clients. So we're going to talk about this. And what we're going to do today, very specifically, I don't want anybody to have a misconception of what we're doing, but today we're talking about why you must offer one-stop bookkeeping and accounting. So today we're covering the why. Tomorrow we're going into the how. Is that fair? Great. Okay, so for everyone, if you have questions, feel free to use either the question and answer dialogue or the chat function. Tad, you'll be monitoring the chat function, I assume. So
yes, I will.
I'll keep an eye on it, but usually what I'll try to do is end, about 10 minutes early, 10 minutes before the hour, so that we have time to get to any questions, but I also try to make sure I answer them throughout as we go. So today we're going to cover the learning objectives, which we'll get to. We'll talk a little bit about the content of today's presentation. I have a caveat in place, tell you a little bit about me, and I'll go into the 3 secrets, and then I'll show you an example of a firm I've worked with that improved their profit. If they can do it, I think anyone can. And then last but not least, I'll show you how, if you've got an accounting firm, you can integrate bookkeeping into it. So what I'd like to get accomplished today, and I'm pretty comfortable we'll get there, is I want our attendees to understand specifically why they must be offering bookkeeping. The second thing I'd like to do is talk about bookkeeping as a way to boost profitability. We're going to look at it as a tool for client loyalty, and we're going to discuss how it leads to value-added services. Okay. So one of the things I want to show, and the caveat I have, is that I talk about specific results from specific coaching clients. Individual results will definitely vary, and I don't guarantee you'll get the same results, because I can't guarantee you'll put in the same effort that my coaching clients did. Okay. Now, the other caveat, I am pro Intuit. I use Intuit very, very frequently. So I tend to talk mostly about Intuit and Intuit products. That's not to exclude other companies. It's just in my experience, and I offer this advice to you as well. I can speak most intelligently and directly about products that I know and use. So I try not to talk about products I've never heard of, never used. So again, that's my caveat. I am pro Intuit, and I'll warn you up front. I'm not excluding anyone. I'm just telling you what I know and what I know works. So a little bit about me. I am an recovering accountant. I used to be in public practice. I ran my own firm for several years. Been in the industry about 26 now in total. And I gave all of that up, the public practice, about 4 or 5 years ago, to focus exclusively on coaching and mentoring accounting firms. My target audience is I help successful accountants who want to be more successful. So I've written 3 books on the subject of practice management and growth. I teach regular courses, facilitate workshops, and I do a lot of coaching one-on-one or group coaching. And I'm a huge fan of technology. Sorry, it sounds like we have a train coming through.
Sorry, that was me. Still getting used to Zoom.
Okay, now one quick comment. Somebody wants me to shrink the screen. I can't do that without losing visual. Is anyone else having trouble reading the slides? If you could just type in the chat. If we can't resolve that, I think that might be screen settings on your side, Randy. If you want, you can try it. Otherwise, we can just send you the slides.
Okay, yeah, and you'll get the slides, everybody. And Randy, try pressing escape.
Okay, great. So nobody else is having trouble. Thanks, everyone. So let's talk about 3 secrets about bookkeeping. And they're not 3 magic secrets, but to me, these are 3 things. Whenever I speak with, I've literally talked to thousands of accountants over the last few years. Typically, the first thing I hear is some variation of, I don't do bookkeeping, it's beneath me, I don't have the time, I don't have the resources. So we're going to talk about 3 secrets, and I'll give you the 3 secrets right now, and then we'll go into each of these in a little bit more detail. Most people don't know this, but bookkeeping actually increases profitability. We'll talk about that, I promise. Bookkeeping is an incredibly valuable tool for increasing client loyalty. Again, we'll talk more about that. And bookkeeping leads to value-added services. Without good books, we can't provide good accounting advice. Without good accounting advice, we can't do anything in terms of helping the client actually run their business. So, without further ado, let's jump into secret 1. And like I said, we'll spend probably about the next 40 minutes or so going over each of the secrets. And then once we get through them, we'll save some time for question and answer at the end. So secret 1, and I'll go into some detail on each of these, but secret 1, we can increase our profitability simply by adding bookkeeping. Now, that might sound obvious, but it's a little bit more to it than just, it's another service we can offer. So let's take a look at that in a few examples. So number 1, it can be, and this is where we see immediate cash flow, it can be a new revenue stream from existing clients. I don't know the audience that well. I don't recognize any names, but one of the things I always ask is, what's your average fee per client? And to me, that's one of the must-have essential key performance indicators that you should be tracking for your firm is, what's my average revenue per client? And the reality is, the lower that number is, the more clients you need to cover your overhead, which in turn means you're working harder, because as you add more clients, you end up doing more administrative work to manage those clients. So if you can offer more services to existing clients, you actually raise your average fee per client, which means you can generate more revenue without the corresponding increase in overhead. If you don't believe me, just talk to somebody who has 50 clients and compare that to a firm that has 500 clients. I guarantee you'll see a shift in terms of the number of admin staff they need, the number of calls, just minor little contacts like how do I schedule a meeting. There's a lot more administration the more clients you have. So if you're looking at, whether you're a firm of one and you want to grow your revenue, or you're a firm of 50 partners and hundreds of staff, the easiest way to grow that revenue is to offer more service like bookkeeping to your existing clients. Now, this is where we start to see the magic happen. It's also a new revenue stream from new clients. So in a lot of cases, we can actually use bookkeeping as a mechanism to drive new clients. We can use it as a marketing tool. We can use it, when we meet people, instead of saying, yes, I'm an accountant, I can do your tax work, we can say, we're a full service accounting firm. We offer everything from books through estate planning. We can do that old adage, cradle to grave. So again, it's a new revenue stream. We can easily bring in new clients. And the real advantage to this, if you think about it, is not only are we bringing in, so if we bring in one new bookkeeping client, odds are really good that we can keep that client for a year. We'll obviously get that bookkeeping revenue for a year, but the odds are also very good that at the end of the year, when that client says, I need help with my tax return, who do you think they're going to go to? They will go to the firm that has been helping them all year round. Now, again, we're talking about profitability. One of the things that I think is a significant measure of profitability is how quickly we can get files done. Because the faster you get a file done, the faster you bill it, therefore the faster you get paid. So if we're doing the books, most accountants I know, they complain that the bookkeeper did a terrible job. They might spend an extra 10 hours on a file trying to clean it up. If we are overseeing the bookkeeping, and very clearly we don't have to do it, we just need to be involved in it. But if we're overseeing the bookkeeping, we can be in a position to make sure that we look at unusual issues as they happen, rather than finding out at year end that the client did something that needs fixing or the bookkeeper did something. So typically what I see in firms that do or manage the bookkeeping, their file turnaround time is significantly lower than firms that aren't doing bookkeeping. And again, part of this is we're chasing data throughout the year. We're getting the paperwork that we need throughout the year. We're not waiting until year end. So it's not everything hits us when we're busy. We can spread the workload throughout the year. Typically, I'm seeing firms that do full service, they're able to do a year end within a month or so of the year end passing. So again, significant improvements in file turnaround time. One firm I worked with, they actually do it in under a week. Again, obviously they know their clients, they know their systems, they've got it down pat. A week might be a little bit aggressive, but I think within a month or two of year end is definitely viable. File efficiency, again, this is something I see time and time again. Because we're controlling the flow of data, we're controlling the communication with the client, we can make sure that we get files done in significantly less time than if the clients were doing it themselves or if we're waiting for an external bookkeeper. So it's definitely an advantage. We want to make sure that we're getting through that one file at a time. But again, it's chasing stuff that's missing in our slow seasons. It's, you know, a consistent process where we make sure we are gathering the information we need for the year end throughout the year rather than waiting until after the year end. Now, this is my personal favorite. I tend to talk to a lot of accountants who are on what I would call the cash flow roller coaster. Basically, you know, we generate a lot of income in tax season, and then, you know, we're flush with cash May, June. That cash sort of tides us over until December, January, and then we're sort of holding on tightly in February, waiting for the crush of cash flow to come in again from tax season. One thing I like about bookkeeping, and you know, we can get into pricing philosophy and all of that, but typically I like a fixed price agreement on bookkeeping, and what that really gives us is a monthly cash flow. We can break that fixed fee into monthly payments. And so one of the wonderful things about bookkeeping is that the clients will, they're used to it, they will pay us monthly. So we've got regular monthly cash flow from the bookkeeping, and then, you know, we sit our year-end work. We can either do that as a monthly fee as well, or we sit it on top of the bookkeeping cash flow. So what it does is it makes sure, you know, with the solid cash flow from bookkeeping, we can cover our monthly overhead, our monthly bills, and really it's just certainty and consistency throughout the year. Okay, any questions on secret one? Okay, so secret two, bookkeeping increases client loyalty. I hate to break this to the accountants out there, and I say this as someone who's been in the industry, who's worked in many accounting firms. Bookkeepers have a strange power over our clients, and the reality is they interact with our clients far more frequently. So when they interact, they build better and stronger relationships. So again, this alone should be a strong enough, compelling reason to encourage you to do bookkeeping. Now, if anyone doesn't believe me, find one of your bookkeepers for one of your clients, tell them they're wrong, tell them they're terrible, and just watch how quickly they get back to the client and how quickly the client calls you to say, I'm moving to another firm. I can guarantee, you know, and again, this is the norm, not necessarily everybody, but the norm. Most accountants I talk to are overwhelmed, they're overworked, and their idea is, why would I see the client more than once a year? So if you're one of those accountants, I guarantee that the bookkeeper that sees their client daily, weekly, monthly, quarterly, they have a much stronger working relationship, and they've built up a better rapport than if you only see your clients once a year. Now, again, I'm not saying if you're a large firm that you, the partner, have to do the client meetings, but basically, as long as the client has a consistent person they can communicate with at the firm, there is better rapport building because you're talking regularly. The other little bonus is you're solving problems as they happen rather than waiting till year end to see what builds up. Now, the other advantage, and this is phenomenal and huge if you're looking at maybe offering more than just traditional accounting services, we can get a real detailed, in-depth knowledge of our client. We can truly understand them. We get to know them. We learn who their vendors are, who their clients are, what sort of terms they have, what sort of issues they're facing. And most importantly, from a client perspective, we can give them real-time advice once we know what's in their books. A lot of accountants, unfortunately, make the mistake. They wait till year end, wait to see what the bookkeeper brings in, and then they call the client and say, oh, I noticed you had an issue in June. How did that go? With this, we're able to say to the clients, okay, I see you have an issue. How can we help you? So the key to all of this is relationship building. The stronger the relationship you have, the more loyalty you have, which means you're less likely to need to find the next new client, the next new client. Now, as I mentioned, we can be proactive, not reactive. And really all that means is, you know, I've had many clients in my career that do once a year bookkeeping. They bring in a shoebox, we do some magic. Hopefully we get everything. But sometimes there's always that inevitable, we'll call them and say, you know, last June, you deposited $10,000 into the company. What was that for? Well, again, the client doesn't necessarily remember that, but we're focusing in the wrong direction. We're always looking backwards, asking questions about what happened. Really what we should be able to do is help them plan and say, here's what's going to happen in the next 3 months. Here's how we see the next quarter shaping out. So if we're doing the books and we're always current with the client, and we'll talk about this tomorrow, but the reality is we can be current. We can literally have bookkeeping done up to date every day if we want to. Again, that depends on the client's willingness to pay. But if we keep the books current, we can actually help the client with cash flow planning. We can help them actually make business decisions rather than trying to put together the right numbers and the right message and story for a tax return. So very important that we can be proactive. Now, the other thing, and again, this is immensely important, clients feel really devalued if we wait until end of year and we start to identify errors or issues. And, you know, a lot of cases, yes, we'll accept that either the client made a mistake, the bookkeeper made a mistake. But if the question is left until the end of the year and we're then digging and spending time, usually what happens is, you know, obviously we spend time, we typically bill by the hour, which means we charge extra for fixing things. The problem with that particular scenario is that line item on our invoice stands out and the client often takes offense. You know, why did it take you 5 hours to fix something that only took me 5 minutes to make a mistake on? You know, it's hard to get billed and, you know, bill and pay for that. But if you're doing it at the time, so if you're fixing an error in June and it happens in June, the clients are much more likely to pay you for that, and they're going to feel that you're on top of things as opposed to after the fact. You're digging up history to them, not helping them do anything really important with their actual firm. Now, the last piece is we can prevent billing surprises. So I mentioned again, if we're doing hourly billing, usually what happens is we come to the end of the year, we got to fix things. There's a bit of a surprise, and usually that ends up being a bigger bill that we pass on to our client. What I like about fixed price agreements is typically we offer a guarantee, we set the price, we tell the client, assuming these things all happen as they should, here's what your fee is going to be, and we're going to bill you for that monthly. What happens if we have a problem or a big mess to clean up? That's something outside of scope. So we send them a change of scope or some sort of addendum to our agreement so they know up front, well, we're going to have to fix something. Here's what we anticipate it being. Here's the extra cost. So you can discuss it with the client up front. And usually what I find is accountants will take the initiative and spend hours and hours trying to solve a problem, when sometimes all it takes is a 5-minute conversation with the client and they'll say, oh yeah, I did that because of this. Here's how it should have been dealt with. So again, we're doing the client a better service. We're not just trying to put time into a file. We're really trying to add value for the client. So if we can do a fixed price agreement, we can avoid those surprises. We can definitely keep the client happier. So again, to our advantage. And one thing I will point out is if you give the client a surprise bill, just for the record, billing happens after the fact. So we did the work, here's your bill. You've literally asked them to put their faith in you, give you a blank check, and just go and do the work. What it does is it fractures the client relationship right up front. So the client will suddenly start to doubt you. They'll start to question things. They'll want to know more about your billing. They want more detail. Again, in a relationship, you don't want unpleasant surprises. So if you can minimize those surprises or eliminate them would be preferable, you can avoid challenging and stressing the client relationship. Now, secret 3, this is to me, again, the most obvious area for growth. Again, going back to my key performance indicators, my 2 favorite ones for most accounting firms are average fee per client and file turnaround time. Now, in this secret, we can offer value-added services, and I'll talk about some examples, but if we can offer value-added services, we can charge premium fees, we can start to build value in the client relationship, and we can increase our average fee per client. In one example, I worked with a firm, their average fee, one specific client, and then this was sort of typical across their firm, they were doing just annual books for this one client, and what they did was work with the client, get the books all up to date, get everything current, and they realized that the client had absolutely, they were electricians, they had absolutely no idea how to actually run a business. They knew everything they needed to know about light bulbs and light fixtures and wiring, knew nothing about running a business. So in this case, what the firm did was they actually started helping the client do monthly bookkeeping. Then they got it to sort of daily where everything was current. But then they did management reporting once a month. And what they were able to do was take it from a $2,000 a year year-end file where they did a tax return and financials. They converted them to a monthly retainer where they were doing controller work, basically anything accounting related, they did it. They were actually charging $2,000 a month. So when they first took the client on, they were charging $2,000 for a year. What they ended up with after I think it was the 2nd or 3rd year of the relationship, they had the client up to $2,000 a month for the controller stuff, plus the $2,000 for the year-end work. So they were actually making, instead of $2,000 a year for that client, they were making $26,000. So that's a fairly significant jump. And if you can imagine doing that across your client base, you can really start to see results. And I'm a big fan of marketing. I love getting new clients, but the reality here is you can make far more money with your existing clients than it's just cheaper and easier to make more money working with them, offer them more services, offer them more value. That is cheaper and better value for you for growth than if you had to go out and find a whole bunch of new clients. So again, you need to know what your average fee per client is. So a lot of people say, what sort of services can I offer? I'm a big fan of the basics. And the reason I suggest basics is because I know that we're all experienced and skilled in this. We just need to make sure that we're doing it. And one thing I'll comment up front is that each of these, I believe, are relatively straightforward. They're all within our expertise. They're all within our skill set. What I would strongly suggest is that you create a process before you do anything with these, and that process should be applied consistently, client after client, so you can have templates, you can have checklists. you use the same software, you use the same tools. And we'll get into some of the tools in a subsequent session where you can actually do this. But for now, suffice it to say, there are several tools out there that can help you. If you've got good bookkeeping, it's easy to provide a cash flow analysis. And, I'm not talking about future-oriented financial instruments. I'm talking about a simple 3-month budget. What's the client's cash flow needs and wants look like for the next 3 months, and how do you prioritize that? If they're looking at buying new equipment, can they afford it from operations? Do they need to finance it? What will that do to other financing? But basically, cash flow analysis is really a simple thing. We take last year's numbers, we apply some percentages of growth to this year, and we give the client an estimate of where we think they're going to be. And again, this is a dialogue where, on a monthly basis, we meet with the client virtually. I do everything through video conferencing, but we meet with the client virtually. We talk about their cash flow needs, changes in the plan. We always do a 3-month rolling plan. This one service alone adds enormous value to a client, gives them that freedom, because really, as a side note, accountants aren't in the business of selling time. We don't sell tax returns. We don't sell financials. What we truly sell is peace of mind. So if we can give the client peace of mind, what does it cost or how much rarely comes up as a question in the conversation. So again, cash flow analysis, just very simple. Here's how we do a budget. If you don't have that expertise in-house, again, we're not looking at, this isn't a publicly traded company. We're not looking at, making sure we hit our projections. We don't have to be accurate within 2 decimal places or anything like that. It's just, based on last year's results, assuming certain changes in the current year, how are things going to look at the end of 3 months? And I expect that we'll be wrong more often than we're right. But the end outcome, the spreadsheet that shows the cash flow, isn't the value. The value is the conversation with the client where you're telling them, I don't recommend that you buy that new piece of equipment this quarter because, as things go without the purchase, you're struggling to meet cash flow requirements for payroll, for example. So again, cash flow is an incredibly valuable conversation, and what it can lead to, and I call this my gateway conversation, because anytime you talk about cash flow, there's underlying symptoms that we can then look at and agree to address. For example, receivables. Maybe receivables are taking too long. Can we help them speed up their receivables process? Sometimes it's an invoicing problem. We take too long to invoice. It then takes us too long to get paid. We can look at inventory. Are we managing it properly? Do we have too much, too little? Are we paying, are we getting supplier discounts? We can look at payables. Are we utilizing optimum discounts? Are we, leveraging the right type of debt with asset purchases? So again, all of these, initially the conversation is high level, but from a high level, and that's where we found with that one firm with the electrical company, once we started pulling on the threads within the cash flow, we realized that literally every line in our analysis had some sort of issue because of weak management, lack of clarity, lack of priority, lack of focus. So it always generated more work for us. And again, the client loved it because they got great value. All we had to do really was what we're best at, which was create spreadsheets and then do what if analysis. So very simple to implement, absolutely, and probably the most powerful thing you can do in order to build client loyalty. And again, one of the things you can do is you can either do it monthly, you can do it quarterly. I don't believe annually is the right level. It's at that point, it's almost pure guesswork. So I would suggest monthly or quarterly. And typically, again, you're not spending days doing a budget. It literally should be something you can do in a couple of hours. The conversation with the client about the budget and the expectations is the important thing. Now, benchmarking, this is one that amazingly a profession such as ours that is so proficient with numbers does very little with. And benchmarking can be a couple of things. One, it can be a comparison of how your business is doing this year versus last year. That's one thing. Another is budget versus actual. And then a third is my business versus the industry I'm in. How am I doing relative to my competitors? And there's some great tools out there that allow easy benchmarking. Profit Sense is probably one of the favorite ones I use, but there's others like Live Plan, Float Fathom, etc. There's a whole list. But benchmarking allows us to help our clients determine whether they're successful or not. So really all we're doing is looking at financial ratios. Are we improving? Are we losing ground? Are we staying the same? Looking at our competitors, how are we doing relative to the industry? Again, this is a really simple one, and it baffles me that more people don't do it. And one thing I will say, obviously, if you're doing review or audit engagements, the rules of professional conduct come into place before, offering services. So you want to make sure you're on side with that. But I'm talking about the average firm that just does basic notice to reader type, compilations. Benchmarking can be absolutely powerful. And again, going back to my comment about, the average small business owner, they tend to be technicians. They're really good at their skill or their trade or their profession, but nowhere in their training did they learn how to run a business. And I would argue that's common problem in the accounting profession. We're all really good at the technical aspects. We know our tax law, we know our accounting, we know GAAP, but nobody sits you down in accounting college. There's not a separate school where they sit you down and say, here's how to run a practice. So giving the clients the value, the benchmarks, it's incredibly powerful because they can see, when you give them a set of financials and they see their net income, the question I always get, is that good? Well, it depends. If you're one person, you have no overhead, and you're generating $100,000 a year, bottom line with no risk, no assets, no liabilities, that's probably a pretty good return on investment. If you're doing $10 million a year in sales, yielding that same 100,000, you've got a lot of debt, you've got a lot of risk, probably not. So benchmarking, all it is it puts context around the things. And again, there's sites out there that have libraries of key performance indicators that you can apply based on each specific industry. So if you have a client that's a dentist, you can look at the ratios for dentists. If you have a client that's a plumber, what's relevant to plumbing? And the magic of this, again, is, you're pointing out to the client, here's where you're doing well, here's where you're not doing so well. This always leads to a conversation, how can I improve? So again, that leads us back to the cash flow, where we can talk about information, how we can improve the business itself. So benchmarking just adds a level of discipline that most small businesses don't have. And by small, I mean typically up to 30 million in sales. Usually businesses seem to get that far on a little bit of luck and the right timing. It's hard to scale beyond that if they don't have some sort of internal discipline. Now, this is very self-serving, and I want to point this out because most accountants I know in the past, back in the days of desktop software, would pick one or two. Usually, if we knew in-house we're good at QuickBooks, well, guess what? Our clients all got set up in QuickBooks. But we didn't necessarily customize it or tailor it to the client in any way, shape, or form. And because of that, typically we didn't charge for it. We just did it because that's what we did. What I'm seeing a lot of successful firms doing now is when they meet a new client, when they agree to take them on, one of the first things they do is a review of their current system. Usually it's an upfront fee. It keeps people going. But what happens is we can charge for it and we can make money off of it. So we can actually do a real good service for the client by reviewing their system, helping them implement it, and then improving from where they are. And again, this can be done with our existing clients. It can be done with new clients. But with the modern cloud bookkeeping tools, there's amazing power in this. Now, I'm going to pause for just one moment. Tad, we need a polling question. Would you mind launching the first one, please?
Sure will, and I apologize for not getting to this sooner, but we will do this one right here. Question is, how do you or does your firm use cloud bookkeeping tools like QuickBooks Online? It doesn't have to be QuickBooks. It can be anything. It can be Xero. That's what we use. Okay. And there's no right or wrong answer here. And if you don't know what to answer, just answer the very last one. That's the opt-out, basically. You don't have any opinion. You're just answering because you have to. And this is a NASBA requirement that we have to present 3 of these polling questions per webinar. So we've got about 3/4 voted. We're going to give it another 5-10 seconds. Everyone would please just click and answer. 3, 2, 1. Okay, we'll close that poll.
Thank you, Tad.
Hang on, we're going to share the results for this one real quick. Majority are not currently, but are thinking or planning on it. Next in line is not currently and have no plans to. And then there are several that are, which is very interesting and very nice. To get up to where we should be, I'm going to launch another poll.
Thanks, Dan.
Get 2 of them out of the way here. What's the number 1 reason you are not sorry for the typo, you're not using cloud bookkeeping or not planning to? And you can pick as many as you want. And again, there's the option right at the bottom where you don't have to pick anything, just answer. All right, racking up some votes here. If everyone would continue that. You just have to answer one, but you can answer more than one if you would like. Okay, about 3/4 have voted. So we'll give it another 3, 2, 1, and we'll close that poll. Share those results. Majority of you say you are using it. Okay, that's great. I have a few scattered answers there. Do appreciate everybody's participation there. Okay, Jeff, back to you.
Excellent. Thank you, Tad. So we just talked about accounting system design. We'll do one more poll in about 5 minutes. So I'll keep Tad queued up and ready for that. We're almost through the slides, and then we'll get into the question and answer part. The next thing, and I think this is absolutely critical, and again, this is about rebuilding relationships with our clients. Most clients don't get management reports. They don't understand what they're looking at if they do get them. So one of the things we can do is help build dashboards, build some reporting, give them updates so that they actually know, instead of, I see a lot of accountants, they'll throw a 100-page package of client and say, here, good luck. What we need to do is show them very quickly, hey, here's where your next fire is coming from. This is what you need to focus your effort on. So again, incredibly valuable one of the things I've learned is that, we sit across from, we see businesses day in, day out, and we assume that our clients are as knowledgeable as we are. Huge mistake. The reality is most of our clients, most of our clients were struggling with small things that seemed obvious to me. So management reporting, absolutely a powerful tool. Okay, and I see a bunch of questions coming in. I will address them right at the end. So we're almost at the end of what I was going to cover. The next one, and I think this is a very valuable one, what I've seen some very successful firms do is set up advisory boards. And basically all they are, and again, this is, mimicking the publicly traded companies, they have, board of directors. What an advisory board should be is a group of people who are paid to sit in, review things with management. Typically, what I see as a good board would be somebody with a solid business background, an accountant who can provide advice on the tax and things like that. And then sometimes you want a lawyer. And again, this might sound expensive, but if the business is looking to grow, they want to do well, an advisory board is one of the cheapest ways to put professionalism into managing the small business. So again, they can meet once a month, once a quarter, once a year, whatever your urgency is. But basically they can add some value by saying, okay, warning, bridge out ahead, or don't do this, this is what's going to happen. A lot of small businesses just do things hoping for the best. If we can help them put together an advisory board, again, it builds strong loyalty, but it also helps the client with growth. Now, the last one that I like is external controller, CFO services. Again, that's sort of a bundle of all of the above, but basically you take on accountability with the client to make sure that they meet all of their statutory, regulatory obligations, they're filing all their financials, you're helping them with management insight. Again, this is something you can either do very well and be very lucrative, or you could do it on a smaller scale and just add to your bottom line. I do know some accounting firms that have shed all of their extra work and they're now doing nothing but controller. One firm I work with, their minimum fee is $6,000 a month per client. And I know that might seem like a lot to a lot of people, but for the record, they're getting their client, they know their ideal client. Typically it's $1 million to 20 million a year in sales, usually closer to the 20 million, but they're focusing on just a few clients. I know one accountant who did this exclusively. He had 10 clients that he worked with, and he generated about 200,000 a year in gross billings with very little overhead, because typically he was, he worked from a home office. He met with the clients virtually, but he was their de facto accounting department. Again, you can do it all yourself, or you can outsource the bookkeeping. But again, if you can offer the full service, the clients will take a long time, they'll forgive a lot. If you make mistakes, they're willing to work with you because they want you to succeed, because they believe in you, they trust you. So external controller, CFO, you can package it as you see fit. I know some firms, and when I worked with a lot, their pricing was about $2,000 a month, and they tended to deal with clients with 2 million or less in sales. So it's really, who do you want to work with? Okay. Now, this is based on an actual coaching client in Calgary. And yes, it's Canadian, but for the record, this works worldwide. I've seen it applied in Australia, New Zealand, UK, South Africa, US, Canada. But this is one client in particular who started with 100 existing corporate clients. Now, their average annual fee, this is just corporate work, but their average annual fee per client was $2,000. So simple math, their gross billings were $200,000. It was a sole practitioner. They had no staff, no real overhead, home office. So the gross 200,000, netted 200,000 ish, probably 180 if we get down to it. But really very little overhead. This person was doing all the work themselves. What we did is worked with them to implement a bookkeeping service, and we talk about the details tomorrow. Within the first year, they brought on 10 existing clients that needed bookkeeping. And they didn't take any of my advice on pricing. They just looked at it and said, our clients are fee sensitive. They were obviously very small clients. So all they did was they offered, it was a $1,200 a month fixed package. And I promise you, these clients were small, simple, repetitive. They made money on these 10 clients, especially using cloud tools. The next thing that happened, again, in the first year we were working together, they brought in 10 new bookkeeping clients. Again, keeping the price low. They picked one industry, they focused on it. It was small self-employed professional services. But basically, they added 20 new bookkeeping clients at $1,200 a year per client. Of those 10 new bookkeeping clients, all 10 became accounting tax clients. So that we added an average of $2,000 per year per client. So overall, they increased their their top line by about $44,000. Now, their margin on that was about, again, they had very little overhead, so their margin was very, very high, let's say 90%. So they increased their bottom line fairly significantly as well. So on a $200,000 practice, in 1 year, we added $44,000 in new fees. Again, this was a client that was conservative, didn't want to grow rapidly, but this is the numbers they came up with. So the last step is, let's talk about how to integrate bookkeeping, then I'll open up for questions. The first thing, and again, and we get into more detail tomorrow on the how, but what you need to do is create a bookkeeping workflow and integrate it with your current accounting workflow. So how do you flow from getting data right through to finishing the books to doing the year end? The next thing, and I think this is an easy one for us to do, is identify clients with recurring bookkeeping issues. These are the ones where we do 50 journal entries each year. Those are good people we may want to contact. So you want to talk to the client, see if they're a fit, see if they'll work with you. The good thing about being the accountant already is how much they're paying their bookkeeper, so you can determine, is it something we want to bid for? Is it something we want to just offer a completely different package? The next piece is go to networking events, luncheons, things like that, try to find new clients. And while you're doing that, identify value-added services that you have the ability and expertise to do, and you can identify those clients properly. So let's open it up to questions, and then I will, for those who are interested, I'll talk about a package that I do where I actually help accounting firms integrate bookkeeping. So I'm just going to go through the questions we have. Okay. Ted, do you want to launch the third poll first?
Yeah, sure. Let's get that out of the way so we make sure our NASBA is happy with us. Okay, real quick, if you had an easy button to implement cloud bookkeeping, would you do it? And by easy, I mean easy. I mean very little of your time, if any. Okay, about half have voted. Excellent. Way to go, gang. We'll give it another 10 seconds or so. 3/4 have voted. Okay, about 80%. So we're going to give it another 3 seconds. 3, 2, 1. We're going to end the polling, share the results real quick. Well, great. About half of you will. That is super. One won't, would consider it, but not right now, and in no opinion. That's great. Thank you very much, everyone, for answering. That really helps us out, helps us stay in NASBA's good graces. Okay, Jeff, I'm going to turn it back to you.
Great. Thank you very much, Tad. So the first question I see is, what are best practices if we also perform attest services? Now, this is a long and complicated answer, so I apologize, Bill. I'm just going to gloss over it a little bit. If you want to explore it further, happy to have that conversation. But for the most part, what I suggest to firms is, again, if you're 100% attest, then you might have a serious problem with all of this. Obviously, you're conflicted out. But what I would strongly suggest is a couple of scenarios. One, implement bookkeeping and accounting work for non-attest clients. So it can be a new line of service that you offer, and it doesn't have to necessarily take time from you or your staff. Bookkeeping is actually really easy to contract out or outsource. So to me, that's probably the easiest, is to focus growth on new clients who don't need your attest services. So create a new separate line. The other option, and I would look at option one first, but the second option is, once you know what your margins are, what your profitability is, what I'm seeing with some firms is they're dropping attest services in favor of value add. And one thing I'll tell you very honestly is, usually you can charge a lot more. Typically, if somebody needs an audit or some sort of attestation, they need it because some external body wants it. It's very rare that they're using it as a business tool. So I see a lot of firms shifting from doing the attest services over to doing advisory services. And interestingly enough, the same skill set, documenting systems and processes, testing internal controls, that is an enormous opportunity where businesses are looking for those services and not able to find it. So what I would suggest is, plain and simple, start a little bit of a bookkeeping, accounting, controller service, see what the margins are, see if it works for you. And if the margins are higher, or if it's more profitable, or you find more clients easily, I would suggest going two routes: doing the full service, doing the attest, but keeping them separate. Again, as far as I know, there's no way to offer both. If you look at the big firms, they've all got their own separate division. If you separate it outright and properly, you can do that. But you do want to make sure you stay on track with the regulators. Okay, now let's just check here.
Okay, Jeff, do you see Heather's?
Yeah, I'm just going through the chat. Are there any?
I think chat's clear. There is one in the Q&A box.
Okay, so Heather's question, how would you recommend setting a fixed annual fee when you have no real way of knowing how much time monthly bookkeeping will take? Okay, so that, Heather, actually is a conversation in and of itself. And believe it or not, I spend a full day with my coaching clients. We go through fee setting. But the short answer is, we're going to be looking at, and again, tomorrow is the how, but we're going to look at cloud technology that takes away a lot of the data entry. So typically you can do fixed fee based on number of bank accounts, average number of transactions. Again, typically looking at how much time was spent last year on the bookkeeping. But the key with cloud solutions is we're eliminating about 90% of the data entry. So if you actually set it up right, you've got a proper system in place, your cost is a very small number. So it's really looking at, how you set the fee is based more on, things like, how frequently does the client want to meet? How many bank accounts do they have? How many credit cards do they have? again, most of the work is done by the software. Just to give you a little idea, some of the maximum firms that we work with, they spend somewhere around 12 to 15 minutes a month per bookkeeping client. So again, give you an idea, your costs can be pretty low. And again, stay tuned. Tad and I will be doing some pricing sessions in the new year where we'll get into this in more detail. There is a tool, it's called Cloud Pricing. The website is pricinginthecloud.com, and basically it walks through, here's how you create a fixed fee agreement for your clients. So there is a bit of an art to it, a bit of science, but at the end of the day, it's knowing what your costs are. Again, I typically outsource or contract that out, so I know what my cost is. I can estimate how much time is going to be spent based on complexity. If you want, one of the things I do suggest is you do it hourly for the first month or two, maybe 3 months, and once you're comfortable with the volume, the client has given you all the surprises, then you can create a fixed price agreement after 3 months. The key is you want to make sure the client's aware of that. Okay, now the next question is the name of websites for benchmarking with industry average. Profit Sense, so it's profit and then CENTS. That's one of the products I used. It's one of the industry leaders in terms of KPIs and data. And I think we had a question about, somebody tried Profit Sense for benchmarking, but couldn't get enough clients interested that would pay cost, let alone time. Again, one of the things I've done with Profit Sense is we do an accelerator program, and that's a little off topic. But for the most part, the problem with Profit Sense is that we as professionals don't recognize the value of it, so we have a hard time communicating that to the clients. So to me, it's learning how to do a bit of a sales conversation, how to build a relationship. My experience, again, I had clients paying me $2,000 a quarter just for a Profit Sense meeting and report. It usually took me 2-3 hours to put it together, an hour to meet with the client. So typically I was making pretty premium rates for the time expended. Again, that sort of differs. That's a little out of the scope for today, but we will do sessions in the new year on how people can actually implement some of these value-added services. Okay. Any other questions? I see we've gone over the hour a little bit. For those of you who are ready to go on with your day, I'm happy to say you've earned your CPE. Feel free to leave. But for those that are interested, I'd just like to share a little bit of a full service package. So if you don't know how to implement bookkeeping, we can talk a little bit about what we can do to help you with that. So again, if you don't want to stick around for this, feel free to log out and move on. But if you do want to stick around, I'll just take about 5 minutes. The full service package we offer is, a lot of accountants say, I can't do this, don't know how to start. What we do offer is a customized bookkeeping solution. We help you identify ideal clients. We help you convert your existing clients. We'll build a marketing plan, and we'll help you create and implement value-added services such as Profit Sense. What we do, it's a 6-week program, start to finish. We guarantee within 12 weeks you'll get your return on your investment. We'll recover your costs, so to speak, and the mere price of that is your investment will be $4,000. Again, full service, we do it all virtually, but we help you set up your virtual practice. We help you do the cloud bookkeeping, everything you need to do to get started up and running and profitable in 6 weeks. So thank you for your time and attention. Any further questions?
That looks like it. I've got a few here on the chat I have answered. Looks like everybody's Several thank yous. You're very welcome, everybody. Thank you for taking your time to attend. Again, I will send out an email to everyone that attended today with the link to get your certificate of completion. Plus, it will have a link in there for the slides if you would like that. And please do sign up and come tomorrow if you can. The how is going to be very interesting. We're going to talk a little bit more about details and actual tools and things like that. So if you are interested, we are doing that same time tomorrow. Any other questions from anybody about anything, really? Anything you got about the webinar, tomorrow's tools, certificates? No? Okay, Jeff, do you have anything to close with?
I just wanted to thank everybody for coming, and I hope to see you tomorrow where we'll, today we covered the why. I hope I've made a compelling argument. Tomorrow we'll cover the how, and that'll be the next step. So thank you all for your time and attention, and I wish you all the best of the holiday season. Hope to see you tomorrow.
All right. Thank you, everyone. Thank you, Jeff, and we'll talk to you next time.